afternoon. It's Quant Trade Edge with a special Saturday edition. I had to leave right after the market close on Friday, so I didn't publish a video. But here it is with more towards looking towards thoughts for next week. Gold was a good trade on Friday. After we poked above the previous day high, we didn't get a traditional two-legged pattern, but we did get this anticlimax, and it'll make a little more sense in the bigger picture when we take a look at that. And that is the 240-minute chart, which had a very nice triangle forming here. You've got this, and you've got this. And if you take it down to say a 15-minute so it's still the same triangle, but you can kind of see how you would enter and trade it. On this first pop above the line, it went and flushed out any of the breakout buyers. So breakout buyers would have been buying in here as soon as the line breaks, and that's often why I like to wait until you take out the high of the breakout bar for that fits pattern, the TLB that we covered in the other video. But once you have a fake breakout and flush those buyers, and again, pay attention to the time of day. 7 to 7:40 is the opening range. That's typically when they're going to want to screw with people, because people are most, amateur hour. Most people are, things are more volatile around the open, and people are more emotional because they don't have a lot of data points yet. So once something gets flushed, it's typically a lot stronger second time through. So that was my reason to get back into this and want to hold it. And the 240-minute chart, it's sporting the breakout. So maybe you get a little bit of resistance up here, but in general, this looks like clear skies. In fact, if we go through our homework pages, we'll do gold first since we're talking about that. We've had two PF3s in a row, slow line pointing up, fast line pointing up, ROC pointing up at this point. And typically when you get a breakout, you can run for a few days. So things look clear in gold. Silver, related market. We still have the P1. We did get above this early entry high, but the real confirmation comes above the red candle, 25.11. With gold looking strong and, silver having that setup still. And silver also had a wedge here that's not as pretty as the wedge we saw in gold, but it is getting taken out. So things look good in silver. And then I believe I posted it on my Twitter, but you can see that the same type of flush out that we had in gold, we also had in silver, but then silver went ahead and formed a vol compression pattern against that. This little area here is relatively tight, and if we put our ATR measure, we'll see that we got down to 0.50. That's very low, and it kind of stayed sustained for a while. So this became a better risk reward setup later in the day, because the breakout from this level here, 24.87 call it, you've got a very tight stop down to 24.75. A 12-cent stop on silver, is nothing for this market. The ATR on this market is currently down to 61 cents, but it's been as high as $1.09. So to be able to have a really good trade setup with a 12-cent risk, just your daily range is 5 times that. And also, just noticing this. Okay, now that's already taken out. So yeah, those are good things we're waiting for on Monday. Let me clean this up and put it back. On crude oil, Friday was an inside day. This high is 98.82. This high is 98.76. If we can take out that high on Monday, that will set up a good Forex trade. That's a good one. Again, we have this compression here, so there can be an explosive move. We'll see. Nat gas is on an extended run. This is the 7th close above the 5 SMA. This is the 8th close We closed with a little bit of a red candle. Tomorrow, a test below this will set up a buy. Hasn't been as strong as I had thought, but it's doing what it should. It's just a very persistent trend that'll probably go higher. If we're looking for any kind of targets on that, it's kind of hard. This is the highest a May contract has ever been. Just, we've reached this reasonable spot, 646. This came on an expiration of the January contract. Again, natural gas in January is not the same thing as natural gas in, May. But it's all we have on the chart to go by, this 734 level. Let's see, crude, nat gas, gold, silver, copper. Copper is not very exciting right now. It's just kind of waving around, in a trend with a slight upward bias. But it's not making big moves right now, and nothing's really set up there. Yesterday could have been a Forex setup, but it wasn't great. And to go back to natural gas for 1 second. Normally we would be looking for a Forex trade if we could take out the low of that red candle. But what I've noticed recently, most recently in the Australian dollar and copper, when you're going against an extended run, you're not going to get 4x. You'd be lucky to get 2, maybe 1.5. So that's just not interesting to me. I would rather sit on the side where the wind is behind my back. And here, fighting an extended run is not going to be that situation. And Australia, speaking of Australian dollar, this was kind of a climactic move here. This is called a wide range reversal. This is the widest range in 4 days, and then to take out that low the next day. I still think we have some strength based on the weekly charts, which are on extended run, but there might just be an extended period of consolidation here to digest the move that we've had. The 240 minute is showing a P1 potential setup, but you can see how that goes. We've got the ROC flip. We went and touched the exponential moving average. There's lots of good reasons to bounce here. Just don't like that this is still a red candle. I just think we have better places to be, notably crude, possibly gas, but definitely gold and silver. And then going into the indices, here's S&P. If you look at the actual pattern we've had, this is a very good pattern, a very strong pattern where we've had an A, a B, a C. Now, this is technically a hoagie on the S&P because this low is identical to this low, and this did pop above here, but we'd want it to pop above here, above the hoagie high, 45.29, to really confirm it. And then the NASDAQ ended up doing something different. Here it wasn't a same low, but then we put in an outside bar, so it's still maintaining this same structure. So on any of these, again, we're looking for that change of structure to set up a good 4R pattern, a 4X pattern, and that's because coming off of a two-wave pattern like this on the daily, if we get a good setup bar, that should lead to good upside. Now, this isn't a particularly good setup bar, just a big red outside candle. Then the S&P had a better one, just this being a hoagie. Maybe the NASDAQ needs one more day of repair before we could do that. And something to just keep an eye on, I don't trade bonds very much, but when you look at the 10-year yield and just back way up to a monthly chart, this is 16% interest rates in August of 1981. This here is 84. This little spike was around the 87 crash, and that was 10%. We can drag a line off of that. We can pick something like the 94 bear market, where I remember that I was trading bonds actually in 94. It seemed like this ride up seemed like a no no lose situation. I'm sorry, I guess it would have been the other way around on yields coming down. So I guess this would have looked like a winner, and then all of a sudden we got this bond bear market, yields going up, bonds going down. But my point here is, going off of either of these significant highs, I mean, gosh, even if we did this one, May 07, I guess the financial crisis, we've broken out of any and all of those. And, that's very significant. This is a monthly chart, so this month has just begun. For all we know, it leaves a tail and comes way down here. We can't really predict that yet. But it's just something to take note of. And then if you take the TLT down to a daily time frame, it's extremely oversold. The RSI is almost down below 30, but the 2-period RSI has now had, let's see, this is 6, so 1, 2, 3 days down, and 3 days below 5. And each of these days where you have a green candle up, that's not really capitulation, and no lower tail. Same thing here, up, that's not really capitulation. Here, at a red candle, went all the way down at one point, came back up. This could be the signs of a bottom. What I would prefer is to get an actual gap down on Monday and then look for an RSU pattern. Wow, that was a strong last half hour on bonds. Probably quantitative strategies that are just buying it for being oversold. But I would rather wait and see on Monday if we can get a gap down and a flush. And then keeping things in context, rates have gone straight up from 2.3 to 2.7% in 7 days. And granted, that's created headwinds in the stock market, but that's not the end of the world right there. That's a very small correction on the S&P relative to the size of the run-up that we just had. We just had this run-up, and we barely, not even gotten to the 38.2 retracement. So just putting different markets together in the context, it feels like stocks have a little more strength in them, like, inherent strength, because they're not falling apart in the face of this bond market. And then this bond market is getting pretty extended and oversold. I think one more gap down could be a final climax. And then, stocks could act as a coiled spring to the upside. Again, we still want to always wait for our trigger points to get taken out to change our bias. But that's just kind of a bias I have going on right now. So, gold and silver look very strong. Oil has potential. Gas is on an extended run. Bonds look like they may bottom, and yields can come down. Stocks look fine, on a relative basis. That's kind of a second-tier analysis. I wouldn't call that a first-tier analysis. So, got to see, there's a lot of geopolitical events going on right now. We got to see what might precipitate this weekend that would be the story behind gold going up, bonds going up, finally after flushing, bonds going up, oil going up, etc. And but anyway, that's it. That's the wrap up for this week. Have a good weekend and come back fresh on Monday. If you haven't already done so, please like this video and subscribe, and that will help us push this content out to more people. And when our content is more widely seen, that then gives us a license to make more content. Gives us the ability to make more content. So do that, and then please also leave comments in the feedback. I do like hearing from you, and it does help my thought process. You're welcome to challenge anything that I say. Or give me better ideas, other ways to look at these things.